This is Nightly Business Report with Tyler Matheson and Sue Herrera.
It is a good deal, a deal that meets our core objectives. This framework would cut off every pathway that Iran could take to develop a nuclear weapon.
World leaders reach an historic understanding with Iran over its nuclear program, and the oil market and investors take notice.
Piece to the puzzle. Wage growth has been missing from the jobs picture, but is that about to change with tomorrow's employment report?
And keep on trucking what the big rig industry has working in its favor that other sectors don't. All that and more tonight on Nightly Business Report for Thursday, April 2nd.
Good evening, everyone, and welcome. Investors across the globe had been waiting for a breakthrough. Today, they got it, and it was historic. 6 world powers and Iran announced a preliminary agreement to limit that country's controversial nuclear program. The deal ends weeks of tense talks and comes a couple of days after the self-imposed deadline. The agreement includes a sharp decrease in the number of Iran's centrifuges, access to uranium mines by inspectors, and the possible suspension of U.S. and EU nuclear-related sanctions. President Obama said the deal was a long time coming.
I have always insisted that I will do what is necessary to prevent Iran from acquiring a nuclear weapon, and I will. But I also know that a diplomatic solution is the best way to get this done and offers a more comprehensive and lasting solution. It is our best option by far.
Oil prices fell on concerns that today's deal could lead to an easing of sanctions on Iran's oil exports, potentially flooding the market. West Texas crude lost about 2% to settle at $49.14, and Brent dropped 54 to $54.95. John Harwood has been following the day's news from the White House for us. And John, it did take quite a long time to get to this point, and some people say now the really hard part begins.
It's going to be very difficult, Sue. But I got to tell you, this is a very satisfied White House tonight. The president believes he has been vindicated in his approach of engaging with Iran, pursuing a diplomatic deal. He was vigorous and affirmative in defending it out in the White House Rose Garden, challenging Congress not to try to block something that allies like Germany, France, and Britain had all consented to, as well as the Russians and the Chinese. So he's feeling very upbeat. The question is going to be how intense is that resistance from Republicans in Congress. John Boehner, the House Speaker, just went to Israel to visit with Bibi Netanyahu, the prime minister, who, of course, he had invited to speak to the U.S. Congress. And Netanyahu has been very outspoken against this deal.
You know, John, as you mentioned earlier today, and the president in his remarks, nothing is agreed to until everything is agreed to. There are lots of drafting challenges and T's to cross and I's to dot.
That's right. And, you know, I talked to a bunch of foreign policy experts this afternoon. Republicans and Democrats alike were impressed by the amount of detail. They thought it was more substantive and significant than they had expected from this framework. But they emphasized that there are various specifics that they want to see. The nature of inspections, what happens to low-enriched uranium, all that has to be worked out by June the 30th. And there is some belief that that deadline needs to be firmer than the March 31st one was that the negotiators went over and spilled over in Switzerland.
John, you mentioned Prime Minister Netanyahu. What does this understanding, if you will, do to relations between the U.S. and Israel? They've
been very strained. Bibi Netanyahu came to Washington and in front of the president, in a manner of speaking, really undercut the deal. The president was due to speak to him this afternoon. We haven't heard Netanyahu's readout of that call, but we did hear from an Israeli government official who said that the smiles in Switzerland belie the terrible reality of this deal. So certainly initially, Israel hasn't changed its stance. The question will be, can the president get Bibi Netanyahu even behind the scenes to not be quite as intense and voluble in his reaction and in hopes of steering off Congress from blocking it? We will see. John, thank you. John Harwood at the White House tonight.
Well, stocks closed higher, snapping a 2-day losing streak on the last trading day of this holiday-shortened week. Upbeat economic reports added to the positive tone. Factory orders up 0.2% in February. The expectations there were for a very slight decline. And jobless claims dropped sharply, and more on that in just a moment. Now, at the close today, the industrials up 65 points to 17,763. NASDAQ gained almost 7, as did the S&P 500. It closed at 2066.
And now to that jobless claims report. The Labor Department said the number of Americans seeking first-time unemployment benefits fell 20,000 to 268,000 last week. That's close to a 15-year low. It's also another sign of continued improvement in the labor market, and it comes one day before the government releases the March employment report, where a lot of attention will be on wages and any signs of growth. Steve Leisman has more.
The job market's been on a tear. 3.3 million jobs created in just the past year, the most since 2000. But during much of that time, wages for average workers have been lackluster, staying at about 2% yearly growth. But could that be about to change? Now that McDonald's has joined several major retailers like TJ Maxx and Target in offering raises to its rank-and-file workers, the question is whether we're finally in an age of wage hikes, and what that could mean for growth, inflation, and the Fed.
There's debates about how the minimum wage flows through. I mean, obviously, there's a number of other companies, including, obviously, a big one, Walmart, which has raised wages. So, on a macro level, this is kind of pressure upwardly on wages, which our economists have been calling for.
We'll get a look at wages Friday in the government's March jobs report, where Wall Street economists look for growth of 248,000 jobs, the 13th month above the 200,000 mark. But forecasters are still looking for muted wage gains of just 0.2% for the month. And there are other concerns about this report. It comes amid a slew of weak economic data, including consumer spending and manufacturing, creating some anxiety that this jobs report could disappoint.
We had a big shock to the economy at the beginning of the year, which was the combination of the decline in oil prices and a much stronger dollar, and that creates a lot of uncertainty in terms of forecasting.
But another healthy jobs report with wage gains to boot could raise questions from the other side about budding inflationary pressures and a Fed that's behind the curve. In truth, wages are still a long way from sparking any inflation, but then again, the Fed is at zero, so rates are also a long way from being able to put the brakes on inflation. For Nightly Business Report, I'm Steve Leisman.
We've been reporting for weeks now that the economy has gotten off to a sluggish start this year, and today the Federal Reserve Bank of Atlanta cut its growth projection for the first quarter all the way down to 0. That is a drop from 1.9% predicted just back in February. J.P. Morgan today also cut its economic growth forecast by nearly 1 percentage point to 0.6%. The firm does see a pickup in the second quarter. Official data on first quarter growth will be released later this month.
The transportation industry is often considered a leading indicator of the economy. And though that sector got off to a pretty rough start this year, there are pockets of optimism. Morgan Brennan has more.
It's been a rocky road for transport stocks. The Dow Jones Transportation Average has fallen 5% this year on worries that first quarter earnings will disappoint. But analysts say that sell-off has created some deals, particularly in trucking.
Well, right now we're recommending truckload stocks to investors versus the less than truckload stocks. Truckload stocks benefit from falling oil, as the truckload guys can only capture about 85% to almost maybe 87% of their fuel costs. So as fuel declines, it helps them out on the cost side.
Diesel is more than $1 cheaper than it was a year ago, meaning lower expenses, but also making longer hauls by truck more cost competitive with railroads. And there are other reasons to like this group as well. Capacity remains tight, and that's expected to drive up the rates trucking companies charge shippers to move goods. Also, since many companies' operations are largely domestic, the stronger dollar is likely to have little impact on earnings. In fact, it could benefit given the consumer-centric goods being moved. Plus, trucking should also get a boost from the West Coast port backlogs, since it's the fastest way to get cargo out. Analysts say there are a number of names to consider.
I think we're in a multi-year cycle for truckload sectors. We like the truckload names, including Covenant Transportation, Knight Transportation, and Swift Transportation.
But there are risks, the biggest perhaps being a slowdown in the U.S. recovery. If economic growth wanes, that could weigh on trucking volumes. Also, the industry continues to face a fierce labor shortage, a shortfall of as many as 40,000 drivers. That number could climb with demand, a scenario that could hinder service times, push up labor costs, and ultimately weigh on profits. For a Nightly Business Report, I'm Morgan Brennan.
An update now to a story we've been reporting on all week. The Indiana Senate and the House have approved changes to that religious freedom law. The bill will now go to the governor, Governor Pence, to sign. And in Arkansas, Governor Hutchinson signed his state's amended religious freedom bill one day after refusing to sign an earlier version of it. Still ahead, the stock you've likely never heard of that our Market Monitor guest says will rise 40% over the next year. She'll reveal it and explain why straight ahead. European regulators may be getting ready to move forward with the most high-profile antitrust case since Microsoft. As first reported by the Wall Street Journal, the European Commission is now laying the groundwork to bring charges against Google. The regulator has reportedly been asking companies who filed complaints to make part of their submissions public. The investigation, which has been active now for years, examines whether Google abused its power as the dominant search engine.
The average rate on a 30-year fixed mortgage barely budged last week, remaining close to historically low levels. Freddie Mac says the national average was 3.7% last week. Rates remain about where they were at the start of this year as the spring home buying season gets into full swing.
Well, the housing market may be heating up this spring, but the mortgage market is still relatively tight. Big banks still gun-shy from losses from years back, are just not being as generous with loans to home buyers, and that is opening the door wide to non-bank lenders. They're walking right into the market. Diana Olick has our story.
Let me see. Shaya and Yehudis Cohn got a lead on the perfect move-up house for their growing family. But in today's tight market, they had to move fast.
I knew that it was if this house went on the market, there's no way I would ever get it. So I bought it before it even went on the market.
They bought the Maryland home with a loan from Charlotte-based Movement Mortgage, a non-bank lender that promises to close loans in just a week.
The fact that it went quickly, so we didn't have to stress about it and worry about it, really helped.
Customer service and more aggressive rates are giving non-bank lenders the edge, their share of the market more than doubling in the past 4 years. Names like Quicken, PennyMac, Loan Depot, and Movement Mortgage are picking up what the big banks are leaving.
Our building actually sits in the shadow of the Bank of America headquarters building, and we've been able to gain #1 purchase market share in that city inside of 5 years by offering great service to the homeowner.
Crawford admits to poaching talent from some of the big banks, and he says it was pretty easy.
They have not allocated the resources to make their service competitive. And yeah, they've given a lot of opportunity to smaller guys like ourselves. And I think a lot of the people and a lot of the talent that was inside those big banks got fed up with that.
With private capital still not returning to the mortgage market, non-bank lenders largely have to sell their loans to Fannie Mae and Freddie Mac, so they have to abide by the capital and underwriting standards of those mortgage giants. That should keep risk low, but at the same time not limit creativity. For Nightly Business Report, I'm Diana Olick in Washington.
All the controversy surrounding lumber liquidators weighed on its sales, and that's where we begin tonight's market focus. The hardwood flooring maker reporting a big drop-off in March sales following media reports that accused that company of selling flooring with higher levels of a known carcinogen. The company denies the allegations and still managed to post better than expected results. Shares were up a fraction to $33.20. CarMax posting a big jump in fourth quarter profit as its used car sales, she tried to say, were strong. Specifically, luxury vehicle sales helped bolster the car retailer's results. Shares popped 9% to $74.73. AutoNation also benefiting from a rise in new vehicle and luxury car sales. The CEO says one car in particular helped performance.
If you look for the industry, all the increase is in trucks. And this is still with the #1 selling vehicle of the last 35 years, the Ford F-150, in changeover. We still do not have full availability, but we have enough now that I can tell you the customer acceptance of the F-150 is off the charts.
And shares were up 1% to $64.47.
IBM has reportedly hired banks to help it defend itself against activist investors. According to Reuters, Big Blue's top shareholders are pressing activist hedge funds to take an interest in the stock and maybe move it up. Shares were up today by a fraction. 160.45 was the close. Simon Property announcing a $2 billion share buyback program. This after Macerich, its rival mall operator, rejected its $17 billion takeover bid. Shares were up a fraction to 199.36.
And now to our Market Monitor guest, who's expecting one of her stock picks to rise as much as 40% over the next years. She's Marianne Montaigne, and Senior Investment Analyst with Gradient Investments, an asset management firm with $750 million under management. Marianne, welcome. Nice to have you here.
Thank you, Sue. I'm glad to be here.
Overall, how do you feel about the market? I know there are pockets that are slightly overvalued by some estimates or richly valued, but you're still seeing a lot of opportunity. So kind of give me the big picture, if you will.
Yeah, I think just looking across the market, we're probably expecting flattish to up 5% for the S&P 500 for the full year. And a lot of volatility like we saw in the first quarter, where it was up as much as 3% and finished the quarter flat. But the pockets where we see opportunity tend to be in the technology area. And so I have three names that I'm really fond of in that area. The 40% grower that you alluded to would be Cray. So this is the supercomputer manufacturer. They're multi-million-dollar pieces of equipment. Sales can be lumpy. They did not have parts necessary to go forward with certain projects, so they had to put investors off on earnings, toward the second half of the year.
They have been down quite a bit over the company issued that cautious outlook. So I would assume that you feel that that really adds to the value.
I do. In the last 6 weeks, I think you've gotten a great opportunity to pick up the shares here to get 40% growth.
Let's move on to your second pick, and I note that you really like growth, basically, and sometimes you like growth with a little income. Your second choice is a very expensive stock, at least in terms of what you have to pay to buy a share of it, and that would be Priceline.
Right. Priceline, yeah. Word to management, split the shares, that would be great. But as for the dynamics of it, 95% of their earnings come from Europe. And it's hurting them right now with the dollar being so, or the euro being so weak, the dollar being so strong. But we think that'll turn over the course of the year as the ECB's actions, work in their favor. In the meantime, we think there's a lot of activity going on the U.S. side with bookings toward Europe. I mean, it's a great value right now. There's pent-up demand. And then, 6 to 9 months out, we think we'll see the European side working. Then the bookings will come fairly early.
Your third choice for us is Cisco Food Services. That's a consumer play, I would assume.
Yeah, I think of it as a technology play because it's a high-volume, low-margin business. And as they implement new processes and services, they can increase that margin ever so slightly, but on big volume, it pays off big on the bottom line. And this is one that will benefit from an acceleration in inflation on the food and paper side. So, as we see people going to restaurants, we've seen the restaurant stocks take off. This company benefits across all types of restaurants, across all geographies. And they just are really a technology play.
You've given us three choices that you like. How long do you hold your typical holding? And what would be an example in one of your portfolios that you've just loved for years?
Right. Well, our typical holding is about 3 years' time. So we give it about a year to, work its magic. Along the way, of course, we're constantly seeing if there's any changes to the investment thesis that would, cause us to exit a position. But one of the ones that we've held for years and years is Visa. And that's one that we bought back when the Durbin Act was overhanging the name. And, it's done extremely well. If you can pull up that, 5-year chart, I guess, since the Durbin times.
Marianne, we'll leave it there. Thank you very much. Marianne Montaigne.
Right, thank you for having us on.
With Gradient Investments. Ty?
Well, there's a new hot player in Hollywood, but you won't see its name in lights. It's China. That country has been doing deals and ramping up investments in the most American of industries, movie making. And as Julia Borston reports, both sides are betting that there's lots of money to be made.
The biggest new star in Hollywood is China. Chinese media companies have been on a Hollywood investing streak, and studios are looking to tap into the valuable Chinese movie-going market. It has the world's fastest-growing box office, expected to surpass the North American box office as soon as 2017.
Well, China's been a fantastic market for us, and some of the last few months we've actually done better in China than we've done in the U.S. And if you look, we don't only do U.S. movies in China, we do Chinese movies in China, films that people haven't heard of, such as Wolf Totem or Dragon Blade.
IMAX, which first moved into China 15 years ago, has 215 theaters there and plans to double that footprint. Last year, it sold a 20% stake in its China business to Chinese investors.
And Chinese conglomerate TCL bought the naming rights to this, originally the Grauman's Chinese Theater, looking to align its brand with the iconic Hollywood spot.
Plus, there have been a slew of Chinese investments in U.S. content production. Just this week, China's Huahe Brothers Media agreed to co-finance at least 18 movies for new studio STX Entertainment. And this follows a big announcement from Lionsgate, the studio behind The Hunger Games. It's partnering with China's Hunan TV Group on a $350 million co-financing and distribution deal.
This is a market that we think that we're going to do a lot of business with. So the idea that we can have a great partner like TIK Hunan in China and investing in our slate, that's good news for us.
And the Hollywood-China love affair has even infiltrated the trade publications. The Hollywood Reporter this week inked a content partnership with China's Tencent. For Nightly Business Report, I'm Julia Borston in Hollywood.
Coming up, what the business world is doing to help the millions of people around the globe with autism on this Autism Awareness Day.
Here's what to watch tomorrow. The stock and bond markets are closed for Good Friday, so you really can't watch them. But the Labor Department will still release the March employment report. You can watch that in the morning, and we will have the numbers for you tomorrow evening. That is what to watch and not watch tomorrow.
Microsoft turns 40, and it's been very good to investors who purchased shares early. Microsoft went public in 1986. Since then, it's had 9 stock splits and has issued many dividends. So according to Microsoft, if you purchased 100 shares at the close of its first day of trading, not the IPO price, but the closing price of $28 a share, and you factor in all those dividend payments and split adjustments, that investment today would be worth $1.7 million.
Airbnb is expanding into, of all places, Cuba. The home rental service says it began offering accommodations to licensed U.S. travelers staying in that country. A company executive said she believes Cuba could become one of Airbnb's biggest markets in Latin America. The decision by Airbnb comes less than 3 months after the United States announced it will ease travel restrictions to Cuba.
Today is the 8th annual World Autism Awareness Day, a day dedicated to bringing attention to those people living with this disorder. But what exactly is autism, and where do we stand on treatment? Meg Terrell has more.
Ryan Flynn and Rhonda Kelly change the light on their front porch to blue every April. Their daughter, Tegan, has autism. Now 7, Tegan doesn't communicate verbally. She's now learning to use an iPad to express what she wants.
The reality is these are just normal people. They communicate differently than we do. They express themselves differently than we do, but they still have thoughts and feelings and emotions just the same.
Autism encompasses a range of diagnoses, all under the umbrella of what's referred to as autism spectrum disorder. The CDC defines it as a group of developmental disabilities that can be associated with significant social, communication, and behavioral challenges, while the advocacy group Autism Speaks calls it a group of complex disorders of brain development.
We think that it's really an interaction between genes making you vulnerable to those environmental risks and then the environmental risk factors. And so those things somehow acting together.
Autism spectrum disorders affect more than 3 million Americans, according to Autism Speaks, and tens of millions worldwide. The prevalence is increasing. In the U.S., about 1 in 150 kids had autism in 2000, according to the CDC. In 2010, that had risen to 1 in 68 kids. The reasons for the increase aren't entirely known. It's thought to be partially due to increased diagnoses, but not completely. Treatment options right now focus mainly on behavioral therapy. Though there are medications, they're mainly for the symptoms.
The cornerstone for treatment right now is behavioral and educational intervention. And the earlier they start, the better these kids will do, the better their long-term outcome is.
Companies from Johnson & Johnson to Roche, Novartis, and Pfizer have had programs focusing on autism. There's also an increasing focus in the community on appreciating what's known as neurodiversity, valuing neurological differences without seeking to treat or cure them.
I don't want to change my daughter's personality. She's funny, she's playful, she's, almost sarcastic, and I wouldn't want to do anything to change who she is. But my concern as a parent is that, Rhonda and I won't be around forever, and we want her to be able to live independently.
Today is all about bringing awareness to autism, which is as much as 5 times more common among boys than girls. The reason, according to Autism Speaks, we wear blue today. For Nightly Business Report, I'm Meg Terrell.
And we also wear our little puzzle piece pins for Autism Speaks.
And Bob and Suzanne Wright, Bob Wright, former head of NBC, one of the great founders of Autism Speaks.
They're pioneers. They really are. That does it for Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching.
I'm Tyler Matheson. Thanks from me as well. Have a great evening, everyone. A happy Passover and a happy weekend.